Well, that's just it. Standing for delivery ends the game. When silver went past 38, Jesse, this isn't retail demand or industrial demand, as Ed Steer says, who's a very smart man who's carrying the torch for Ted Butler. God rest Ted's soul. This is short covering. I agree. You see exploding exchange for physical spreads and rising open interest and increased volatility. This all points to big players getting squeezed, as far as I'm concerned. And if major bullion banks are indeed reducing their short exposure or even starting to go long, then this is a huge shift. And it suggests that they no longer feel confident, if you will, anyway, controlling the price the way they did in the past. And they did that naked shorting, meaning, as an example, if I have 1 million ounces of silver in my warehouse, which isn't unusual, I will sell 1 million ounces short on paper, and so that I'm market neutral. One goes up, one goes down, commensurate. That's a covered short. A naked short is you just short with the expectation of the price going lower, and you cover it, and you don't ever have to. You cover it, or you don't need to cover it, and you don't ever have to deliver because the price goes the way you think. And if you're a bullion bank and you just keep shorting and shorting and shorting and shorting, you overwhelm the longs who get margin called and finally bail. But when you have sovereign wealth funds and sovereign wealth funds really being a proxy, if you will, for some central banks perhaps, their deep pockets rival those of the bullion banks and make it very difficult for the bullion banks to overrun them through margin calls. So yeah, I really do think we may be witnessing the beginning of the end of the silver price manipulation. I hate to say that and be wrong because I think these are very powerful players, but I think that it's becoming a game that has been exposed. For all of the years that they've controlled the price going all the way back to the London gold pool, there was never anyone wealthy enough, sophisticated enough, motivated enough to challenge the COMEX. The closest one to it were the Hunt brothers in 1980. But now you're seeing governments and sovereign wealth funds that are demanding real metal and real delivery. And these deliveries, to me, are, being, not only that, they're being withdrawn from the COMEX. You mix all of that in with the exchange for physical spreads widening and the deliverable supplies tightening and the increased volatility. To me, it is a classic short squeeze. And I think the bullion banks are starting to reevaluate, if you will, the wisdom of doing this. And it used to be easy money. It's not so easy anymore. And I don't know. I think that this is the kind of development that leads right into price momentum and maybe even a de-risking of the price manipulation. In other words, this is a big deal if you're on the wrong side of it. And I think if I were a board member to one of these banks, I'd say, what the hell are you doing? Time to quit this game. It's just too risky. So yeah, it doesn't surprise me that Ed would say that. And let's hope he's right, because no one really knows the real price of silver. And it hasn't been allowed to find price discovery in forever because of the shorting. You have 8 Western banks, and this is Ed's own information, he'll tell you, that have controlled the largest naked short position in the history of the COMEX market ever. And it's in silver. Why are 8 banks holding down the price is the bigger deal. And that's when we get into the military-industrial complex, as you and I have talked about. But that was a game that didn't have challengers. And the challenging is standing for delivery with deep pockets. And that's when things began to change. And that seems to be the path that we're heading down right now. So I am cautiously optimistic that we may actually be witnessing the beginning of the end of the silver price manipulation. Price is irrelevant. In reality, silver is inelastic. It's an inelastic component in industrial applications, solar panels, medical devices, electric vehicles, or military. That means that, in essence, that even if the price of silver rises, manufacturers must continue to buy it to meet their performance standards, or just because it's the only thing that works in those products, and it's usually in such small amounts, it doesn't matter. What really matters in rising price, see, I think the reason they kept the price down is less to make cheap weapons, because in essence, those weapons cost so much damn money that if you're putting 500 ounces in a Tomahawk missile, yeah, it would add up over time. But at that level when you're selling missiles for $20 million a piece or whatever they cost. What's a few hundred or a few extra $1,000? It's really nothing. It's more along the lines of the control of the silver price, to me, has kept everyone out of the market. Because it's been counterintuitive in its nature, in its movements. You look at the silver squeeze crowd, who was all, really disenfranchised, watching the price come back down from $31 in 2021, when it hit $30, and then bang, you got what was his name, the head of the CFTC at the time, who said we had to tamp down the price of silver, and it did. It went straight down, and it hasn't come back up until now. And so you have, I think, more along the lines of demand control in an asset class that is depleting in nature. Remember, we talk about right now a 92-to-1 gold to silver ratio. But Keith Neumeier will tell you it's coming out of the ground, its mining ratio is 7-to-1. So we're in a situation where, it was 16-to-1 for 5,000 years. Now it's 7-to-1, and that's because silver is found in nature in a form called epithermal, which is like epidermis, your skin, near the top of the surface, and all the big deposits were found forever ago. It's depleting in nature. And so you have a situation where if you need this to make weapons, well, then you make it very volatile, very counterintuitive, and you hold the price down. So people say, what the hell do I want that stuff for? If it's not going up when there's record inflation and chaos and COVID and all of these things, well, will it ever go up? To your point, you have all these comments. It'll never not go up, or will never go up because they can control it forever. No, that's not the case. And I think that's really the issue, is that its rise in price would signal to the world that this is something people should own, and would quickly crowd them out of available supply. And while there's good supply on the retail market, you look at the industrial bars, they're disappearing. You look at the level, as I mentioned, the lowest float ever in the history of the LBMA. And so there isn't enough supply at the industrial level, at the top level, to allow silver to run, because you attract more demand then. And gold and silver are those kinds of investments. The higher the price goes, the more interest there is in it. It's different. Normally you look at other things and see the price go and people get afraid. Not with gold and silver. When it runs, it signals, I think people make that move understanding that the dollar's in trouble, the market's in trouble. And that's why they've held it down. It's more about available supply to me than it is the cost of things. If you need 1/8 of an ounce of silver in an iPhone, if the silver price triples, who cares? You still need it, and it's not going to materially change the price of the product. That's why it's inelastic. So for me, Jesse, it's not about price as much as it is availability in a world where it's disappearing geologically, where the above ground supplies are disappearing. And that's evidenced by, as well, all of these deliveries to COMEX are leaving COMEX. Well, where's it going? Who's taking it? Why? And then if that's gone, then what? Where do you get it? We're having another structural demand, another like 5th or 6th year in a row, 250, 260, 280 million ounce shortfall between supply and demand. And that might be why you see China flying all around the world as the second largest producer in the world, buying doré and concentrate, because they know that ultimately it is needed for their country, for the future. And as Eric Young, who is one of my favorite, you should have him on your show, King Kong on Twitter, I think it's YEUNG. He lives in Hong Kong. He says China is indeed doing this. They're joining the West and suppressing the price and going all around the world, gobbling up silver in ways that disintermediate the price in the market realization of what they're doing. They're using this as a tool for accumulation, as we use it as a tool to keep people out of the market so that we can build high-tech weapons and sell them all around the world. And you look at a company like BlackRock, who is the largest shareholder in PSLV, who is the primary custodian, along with JP Morgan, of SLV, the world's largest silver trust, who owns all the manufacturing of weapons. They own all the weapon manufacturers, or the largest shareholders in them. So they keep the price of silver low by shorting things like SLV, naked shorting, and on COMEX. They make the weapons because they own the weapons manufacturers. They sell them all around the world and then blow up places like the Ukraine, and then they come in and get the reconstruction contracts. It's a game of war and reconstruction, and of BlackRock controlling it all. But this is changing, because you have players now standing for delivery. And so I don't care how high it goes. It's not going to materially change manufacturing because of its inelasticity, but it will if all of a sudden you just can't find any available silver because people realize just how critical it is. It is not industrial. It is critical, and it should be. It should be at the top of the list of things that are massively important to any government in any country to secure their future. Yeah, man, look, you have a 40-plus year cup and handle formation. From a standpoint of technical charting, technical analysis, that's as strong as it gets. Clearing 39 or touching 39, not only in spot this morning, but in the futures market last week. That's the strongest showing, as you mentioned, since 2011. The resistance that we see that it cleared was the $37 to $38 range. And that sets the stage for certainly, in fact, I wouldn't be surprised, and I hate even saying something like this, but I wouldn't be surprised to see it go through 40, 41 this week. There's very, very little resistance at these levels because if you look at the so-called resistance, it had traded at those levels for not more than a day or two on its way, up and down, which were very quick. And so that is, to me, not really resistance. It's mild resistance at best. You look at the gold to silver ratio, which is still massively elevated. Last I looked last night, it was 92. That's historically a massive bullish signal for mean reversion, as it's called, where you revert to the mean, where, the average price for the past 150 years, that ratio has been about 42 to 1. That's man's price. That's man's ratio. God's ratio, or the mining ratio, is roughly 7 to 1. In fact, I just saw Keith Neumeyer at the Rule Conference last week. And again, he says, yeah, it's coming out of the ground at 7 to 1. Now, you have all these fundamental drivers that people are talking about: clean tech, electronics, monetary demand. Of course, you also have the defense demand that we've talked about before. These are all tightening fundamentals. And what's really different, aside from the technical breakout, the seasonal tailwinds, the strong fundamentals, all the things that you'll read in Bloomberg, to me, is that we are seeing massive deliveries on COMEX and on the LBMA. In fact, we're seeing big deliveries off the Shanghai Exchange. You're seeing a demand for physical delivery that is very unusual. The largest deliveries in the history of the COMEX in May, and then again in June, huge deliveries. You're talking massive, massive, massive change where you're seeing it might be the second largest. I think the one Warren Buffett delivered all of his silver to the COMEX for SLV, I don't know how many years ago. That might be the single biggest. But if I'm not mistaken, the May delivery was the second largest delivery in the history of the COMEX market. Now, who's doing all of this? And that, to me, is what's very different. You look at the LBMA, which is a T+1 settlement market, Jesse, where T is the trade day plus 1 settling. The third day the bar should be moving. Well, they've been on a T+8 week settlement for quite some time now, 4 to 8 weeks, typically longer than the 4, closer to the 8. And they cite a shortage of manpower and trucks. Well, what that really is being caught with their pants down. And you take a look at their supply numbers. They have the lowest float that they've ever had in the history of the market since they've been keeping records. This is a 140-year-old exchange. I don't know how long they've been keeping records, but it's the lowest float, somewhere around 170 million ounces. So if you realize they have about 750 to 800 million ounces there, that means that the rest of the silver, minus the 140 or 50 million ounces, belongs to the ETFs primarily, like SLV, who, ironically, BlackRock and JP Morgan are the primary custodians. Don't get me down that path. But when you realize that, according to David Jensen, who does a marvelous job at analyzing the LBMA, that they're trading upwards ends of 1.9 billion ounces per day, which is 3.5 times annual global mine supply. At the same time, it's, in this case, about 12 times the float. So they're trading paper. And what differentiates this market in both gold and silver, in my mind, you could say the same thing about platinum, is that you have massive volume and massive deliveries. And no one ever stood for delivery. So it's kind of like Bernie Madoff, who everyone thought ran a great shop until people said, we need our money. And then you begin to see cracks in the system. Well, you could argue that's where we are right now when the LBMA shifts to a T+8 week settlement from T+1 and citing a shortage of trucks and manpower. Well, what could possibly go wrong? So, yeah, I think that we're on track for further gains. I would not be surprised to see $50 later this year. I wouldn't be surprised to see $40 later this week. So, yeah, there's a lot to be excited about in the silver market. I think the fundamentals are insane. And I think more than anything, and I've cited this before, there's a lot of talk of the BRICS meeting we just had, and there was more talk of the BRICS grain exchange. And the gentleman running the grain exchange, Jesse, said, we produce and consume more grain than they do in the West, but we can't control the price. That's controlled on COMEX. But with the development of this new grain exchange, that will change. So they know what we're doing with all of the commodities, from grain all the way up to platinum and everything in between. And they've been using that against us by standing for delivery across the globe. And I believe that this isn't going to change. You take a step back and then you look at a bullish figure. And I don't mean to answer this question so in depth, but I think it deserves it after all of these years of waiting for the breakout. You look at China, they're the second largest producer in the world. David Morgan, if you ask him, would tell you they told him, the Chinese did, that they're number one when he did a tour there of some mines, but they're listed as number two. Second largest producer in the world, and yet Sean Kuhn from Dolly Varden, if you ask him on air, he'll tell you that they're flying all around Latin America, in particular Peru, the Chinese are, buying doré and concentrate directly from the mines, disintermediating the marketplace, and sending it back, paying double what the West was, sending it back for refining in China. Now think about it. Why would the second largest producer in the world, or maybe the first, find it necessary to buy doré and concentrate, way outpricing the market for it, and then sending it all the way back to China to refine it if it was just a commodity like we are led to believe? And I think you look at the folks in Canada, some of the banks and the mining companies who are petitioning Ottawa to reclassify it strategic from industrial, and you see the moves that countries like Russia making it part of their strategic stockpile, India buying 900 million ounces in the last 5-6 years, China flying all around the world to get it, and deliveries burying the COMEX market to the lowest float in history ever, and for the LBMA rather, and then COMEX delivery, largest deliveries in the history of the COMEX market, seems every single month. So you're seeing what I believe is perhaps a rewriting of the silver narrative, where this game of naked shorting is an existential threat to some of these players. And I think you're seeing the commercial banks wake up a little bit to the reality that this is a game that cannot be played anymore on a naked basis, meaning shorting without the silver behind it, in order to control the price, because the rest of the world has become coordinated, motivated, sophisticated, wealthy as hell, and they know what we're doing, and they're standing for delivery, and that is how the game ends. Jim Sinclair always said, that's how you beat them, stand for delivery. Well, it's one thing when you and I try to stand for delivery and even take something off of COMEX. It's another thing when you are seeing billions of dollars worth come off the exchanges every month, when you're seeing the biggest money in the world, who is not only the biggest money, they're the most well-informed traders on the planet in what is a very sophisticated endeavor, and that is to drain the world's exchanges. It's just beginning. I do believe silver will go on a slingshot run that will surprise even silver bulls, especially when you compare it to gold's performance. It's following suit just the way it normally does. Gold leads the way. Silver slingshots past it on a performance basis. And if we close above $41 an ounce, I mean, the sky's the limit. There's virtually nothing between it and 50. You get through 50 and it's nothing but blue sky. It's the same thing when gold closed above its previous peak of 2200, and here we are, 3,300 and change very quickly. So I expect this to be an epic run for silver. Could we still see some volatility? Absolutely. At these numbers, sure, you'll see some volatility, some bouncing around, some corrections, but ultimately, because it only lasted a day or two, literally at the next resistance levels, to me, it's not even really resistance. So yeah, I think there's a lot to be excited for in silver. I really do.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers, but physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming, young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, The smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.